Hello traders, how are you? Vladimir here from Home Trader Club, and in this video I would like to talk about how to join an ongoing trend. How to trade with the trend. There are so many great strategies out there. There are so many great indicators that help you to join a trend. But indicators are amazing, but price-wise, that's what you want, the combination of price action or price behavior, or analyzing the charts purely, and then combine that with the indicator. And in this video I want to explain my strategy, one of my favorite strategies to be precise, how I analyze a trend, how do I find this condition in a multi-time frame scan, how do I define if I have enough room for such a trade, enough to ride it, and how do I make my decisions where and how to join this ongoing trend. To present the strategy, I will take a trade directly from Home Trader Club, and I want to explain all that technique behind it and all the decisions behind it, what, how, when, and why. So I am in the members area of Home Trader Club, and I will be talking about the Swiss yen buy a trade executed on 15th of May. So this was the original call. Okay? As soon as we got the trigger here with the break of this line, which I will explain in a second why this specifically is a pattern I love so much, the logic here was get into the buy with the retest of the line which happened right here, right? And ride the trend all the way to specific levels, which I again will want to explain how do I determine them and how do I make my trading decisions. Now let's go directly to the chart and let's see how do I make my flow of decisions when I define and analyze a trending conditions. But before that, I would like to take the opportunity and to thank Mugan Markets for supporting my work, my channel, and my community. I joined Mugan Markets recently, and this is what you see on the screen is my account with them. To join Mugan Markets and enjoy all their great trading conditions they offer for the community, please follow the link below this video in the description. And now I want to talk about the trend, but first of all, I will go blank screen just to present what I have to say about the trend. So first of all, what is a trend? A trend is a sequence of highs and lows going in the same direction. I'll repeat, a trend is a sequence of highs and lows going or pointing or aiming to the same direction. If it's an uptrend, they both heading up. Higher highs, higher lows. If it's a downtrend, it will look exactly the same, just opposite. Lower highs, lower lows. We get a sequence to the downside from both the highs and the lows. Okay, that's the pure definition of a trend. Then, of course, there are the terms of short term, intermediate term, long term, trade trends, and so on and so on. Okay, that's where the periods vary. So many traders believe that the minimum for a trend, it's like 3 weeks, a short term. Then several think in terms of bars, anything between minimum 50 bars or 80 bars or 150 bars. Again, depends how long the trend you want to work with. Price-wise, not period, it's all about the sequences. So healthy trend is as long as you have conditions of higher highs, higher lows. Now I want to explain a multi-time frame trend. So imagine I'll go red color now, and let's say this is a weekly time frame. So imagine we have an ongoing sequence of higher highs, higher lows. At that point, when we got the pull back and the market starts to bounce again upside, what is the trend here? Is it bearish or is it bullish? Tell me, what do you think about it? Share in the comments. I'm interested, how do you think about it? The answer here is it's a bullish trend as the sequence continues. We do have higher highs. We do have higher lows. We never flipped and changed it. So technically speaking, based on this time frame, we would like to go and look for buy opportunities, just analyzing the price. Okay. Now imagine we analyze the daily chart. I'll do it with the black color. Okay. So weekly is the red, black would be the daily. Okay. When we got a sequence of higher highs, higher lows, correction, again higher highs, higher lows, again correction, and now we start to see higher highs, higher lows. So the daily now is synchronized in the weekly chart when it was not synchronized here during the correction, because the daily was pointing and making lower highs, lower lows, while the weekly was making higher highs, higher lows. At that point, the daily is again making higher highs, higher lows, which is synchronized in the weekly time frame. And I do the same on the lower time frame, the next lower time frame in the sequence. So if it's, for example, weekly, daily, then the next one is the 4 hour. And here I would want to see the same. It will be blue color. Okay, higher highs, higher lows, correction, and again synchronization. If that managed to happen, I have a great conditions to look and to join the trend. Before I continue further, let's take a look on the chart and see exactly what happens. Watching on a weekly chart, what sort of a trend we have here, we don't need to be genius to understand that. It's a clean sequence of higher highs, higher lows. Is it going to continue forever? Most likely not. Of course, we will mention how trend changes. But at that very moment, there is no argument that the buyers are in control. Then we go to the daily chart to make sure we are synchronized in the same direction. And the daily chart at that time has its own sequence of higher highs, higher lows. It never changed. It just synchronized in the weekly analysis. So technically speaking, every correction and then a bounce upside should lead us to the same conclusion. Look for buys. Okay. Again, only price wise. So here happens the correction. Let me drop it for you here and you will see. Okay. Here happens the correction on the 4 hour chart. Here comes the 4 hour chart. And for that, I want to explain now the next important step and my favorite, well, one of my favorites ways to analyze the price and look for the trend opportunities. For that, again, I go blank screen, and here is the classical trending structure. Okay, sequence of higher highs, higher lows with one of the following corrective structures. It's either A, B, C, D, which is 2 waves correction, or if it's again 3 higher highs, higher lows, or some sort of a range with at least 5 spots, and then a breakout. In our case, not the range happened, but the ABCD happened. So here is what I want to see. I want to see sequence of highs, okay, at least 3. I want to see sequence of lows to the same direction, upside in that case, okay. Then I want to see ABCD, which is 2 waves correction. That's how it looks like. Call it ABC, call it 1, 2, 3, 4, does not matter. Not the name defines the trend, okay, or the trading opportunity. So what happens here is 2 waves pullback. I love to see the pullbacks going as deep as to retest the previous low, or at least close to that, and not usually, it's not correct to say not, but usually the previously created low or the last created low of the uptrend will be a previously broken resistance that becomes as a support, and not deeper than the first low. Okay, and if it does, I want to see it bouncing back from. And after that, this is my like the ideal zone. And after that, what I want to see is the price going and breaking above the previous like ABCD line. So if this is the ABCD line, I want the price to break and hold above these falling lines. So in our case, right here. So going back to the chart, this is exactly where it managed to happen. Let me just remove 4-hour chart. As I said, I want to see the price dropping to the previous low, and not more than the first low, okay, or at least close to the first low. In that case, we came very close to the first low. It didn't manage to clean that, but it managed to make two waves, bounce and close above the falling line. Now, here is the main trick. This is a classical trending structure. It's great to trade that as long as you join the higher time frame without ending conditions. What are the ending conditions I'm talking about? I'll go blank screen once again, and I want to explain that. Ending conditions for me just start when at the end of three higher highs, higher lows, observing the indicator MACD mainly for me. RSI could be good alternative as well, where we will see higher highs on the chart but lower highs on the moving average of the MACD. If that happens, that's a big warning sign. To join a trend here would be riskier with smaller chances. So I'll go again to the chart, and in that moment, right here, I need to go to the daily chart and ask myself, do we have anything against the buys? The answer is no, because as the market making higher highs, so does the indicators. That's a classical synchronization between the price and the indicator. You see what happens now after this rally, while the market making higher highs, the indicator starts to make lower highs. That's an indication that to join a trend now would be considered much more riskier than before. So with all that in mind, I always comes with the question, up to where? Okay, so if this was my trigger, let's go again to the chart and plot the line. If this is my trigger, I need to ask myself a simple question. Where am I going to protect? So the most conservative way is to protect the previous low. The more aggressive way, if another low is available, in that case, we have a spike here, protect there, it will be more aggressive. On the other hand, with better risk reward offered. Okay, and up to where am I going to trade it? So one of the ways I love to do it is to drop Fibonacci expansion on the ongoing trend conditions. So if I drop this Fibonacci expansion on the first leg of the expansion, I figure out that here is the 160 expansion. Okay, that's another classical not another, first classical way to aim. Okay. Now, personally, what I love to do is I love to work with a little bit of deviation, because the market is not perfect. We cannot always anticipate the exact price exactly touching. So what I love to do is to count the whole move from the beginning of the trend towards the level, and I see this is about 2,000 pips. So that minus 10%, which is 200 pips in that case, would be the target zone. So 200 is about here. So as soon as we get here, it's also close to, take a look on the chart, 155, round number, psychological number. So that would be a potential target zone for me. And what I need to ask myself eventually when I am going in a trend, if I enter at that point and protect my stop loss, do I have a good risk reward? Good risk reward is anything positive that works in your favor. So if you are risking 180 pips, for example, and the profit is 180 plus, that means the risk reward is in your favor. It's positive. The bigger, the better. In that case, we get about 1 to 2. If you go with more aggressive way, this is 150 versus more than 300, that's more than 1 to 2 risk reward. And what you get here is a classical opportunity and way to join the ongoing trend. But now I want to discuss about something else, which is not less important. But before that, I want to invite you to our Home Trader Club if you are interested in what I just presented. And if you want to learn much more in real time how all these opportunities spotted, mainly why join us in Home Trader Club. And here you would be able to find all the courses ready for you, ready to go. Okay, you will find a free course, Home Trading for Beginners, for advanced, and very comprehensive media zone with webinars from myself, from guest speakers, and so many more amazing tools that will help you in your trading journey. And also, I want to ask your support and your help. If you find value in this video and other videos I do for you, please hit this like button below this video. If you are new to this channel, please subscribe to the channel. Feel free to share it with anyone who you would like and you believe will benefit watching this video. And once again, I want to thank you for watching, of course. Also, any questions if you have, or any feedback if you have, in the comment section, few words will make a great contribution, great help and support. That's how YouTube algorithm works, and your help is very much appreciated. So thank you in advance, of course, for those of you who take the time, opportunity, and put the efforts to help, support, and assist. Now I want to talk about the final subject. The trend is your friend. You heard that, didn't you? The answer is yes, the trend is your friend until the end. Every trend comes to the end. One of the methods of the ending condition of the trend I mentioned before is when you got higher highs on the chart versus lower highs on the indicator. That's the first sign. The next sign is when the final rising trend line in the uptrend is broken and trend is switching by making lower lows. Usually that's where sell opportunities come in play. So that's how every trend eventually will come to the end. And I really suggest, if you're interested in the subject, make sure you watch this video. Where do I point here? On the right here. Make sure you watch this important video on the subject. I explain in details there how I work with trend changes as well. So that would be it for this video. I hope you find value in it, and if yes, please hit the like button, drop few words in the comment section, and I would like to thank you, of course, for your time watching this video. Feel free to share it with anyone who you believe can benefit from it, and I invite you once again to our trading family, the Home Trader Club, where you will get your access to absolutely full, complete trading courses, real-time trading education, real-time trading opportunities, and access to our community, to myself, my team, and other veteran traders. So join us with the link below this video and the description. Thank you for your time watching it once again. I wish you and yours all the very best. I'll see you soon with more, and bye for now. Good trading.